You may never have seen your credit report, but it's the key to getting the loans, the credit cards, and that dream home that you've always wanted. Joining us this morning is Edward Jamison, an expert on credit repair, to tell us how you can repair your bad credit. Good morning, Edward. Thank you for being here.
Thanks for having me.
It is all about the credit score and that credit history. Most adults have one, and it follows you around.
Yes, the thing that most people don't realize is your credit score obviously is used when you're getting loans, but they even look at it for employment purposes. They look at it when they decide what rates they're going to give you for auto insurance. They've done studies where people that have had low credit scores have actually been more of a risk to insure than people that didn't. I mean, the credit scores across the board in just more ways than credit, but it's extremely important with credit, obviously, when it comes to getting a home or a credit card or a car.
The basic things that affect credit: high debt. Maybe you have a lot of debt that you owe, late payments if you make your payments late, and then also court judgments can affect your score as well.
Yeah, the thing that people have to keep in mind is the credit score is just trying to predict whether or not somebody's going to pay 90 days late in the next 2 years. So since it's trying to predict that, things like very high debt ratios, so if you're maxed out on your credit cards, there's a good chance you're going to pay late. So, I mean, like, you have to have low credit card balances, pay your bills on time, and you should be okay.
Okay, now that we've got that out of the way, what is the best way to improve credit? You know, the credit score may be down in the 400s, 500s, which is, you know, how do you get out of that?
Well, the key is people have to be realistic. If they have $50,000 in credit card debt and they can't even pay their electric bill, they're not going to get out of debt, and bankruptcy is probably going to be their best option. So sometimes, unfortunately, that's the only solution. But if somebody can put together a good budget and actually just quit spending on their credit cards, but don't close your credit cards. If you close credit cards, it makes your score tank. You can't do that.
Can it be done quickly, or does it always have to take time?
Fixing your credit can take anywhere between 30 to 30 days on the good side, and it can take as much as a couple of years if somebody has to pay off a bunch of charged-off debt.
Okay. When is it a good idea to consolidate? People that maybe have more than one credit card and have a lot of payment out there, then...
Well, it's always a good idea to consolidate if you can save money on your monthly payments, but when you consolidate, you shouldn't close the credit cards because you're going to reduce the average age of the credit you have, which is going to hurt your score, and you're also going to, if you close the credit card, you're going to increase your debt ratio, so you be careful.
Biggest mistake people make to hurt their credit score is what, or to hurt their credit itself?
Is closing credit cards. That's the biggest, or getting joint credit with their spouse.
Okay.
You should never have a joint credit card. It's not a good thing.
So if you maybe have a credit card paid off, when you close the account, you're closing available credit to you, and that brings your credit score down. Okay.
Yeah.
Yeah, most people right on. I think we got it. Anything else important want to mention?
No, it's just make sure that if you have credit cards, don't close them. Keep them open as long as you can, but make sure they're always paid as close to zero as possible.
All right. Edward Jamison, thanks for being here.
Thank you.
Take care. All right. We'll be right back, everyone.